Bitcoin breakout imminent. What are you doing? Bitcoin just corrected to the mid 100k range, but it didn't break. In fact, it's rebounding back to 103k. And the big question is, when does the next leg higher begin? We've got new macro numbers, fresh on-chain signals, and signs that the whales are positioning again. We are also going to talk about Trump's Middle East tour, US-China tariffs, and what might come out of this weekend's key negotiations. Plus, as always, we will break down the Heatmap and CVD to see what's really happening under the hood. Hey everyone, I'm Neil. Welcome back to the channel. If you find this breakdown helpful, be sure to hit like, subscribe, and let's get into it. We start with the macro picture and where the markets are at. The three major stock indexes on the New York Stock Exchange closed mixed. The Dow closed slightly higher at 0.65%. The S&P closed up at plus 0.41%. On the other hand, the Nasdaq closed down minus 0.18%. My interpretation, tech stocks underperformed, possibly due to sector rotation or caution around macro events like the PPI or Powell's speech. More on that later. Yesterday, the US released major economic data, and here is what stood out. Core Producer Price Index fell minus 0.4%, and headline PPI dropped minus 0.5%, the lowest inflation read in 5 years. Retail sales came in slightly better than expected, up 0.1%. But retail sales control dropped by 0.2%, signaling that consumption is beginning to slow, not collapsing, but clearly cooling off compared to prior months. This points to a big shift. Markets are no longer worried about inflation. They are starting to worry about recession. And what about Powell? Everybody was waiting for the man to speak out about rate cuts. But he said nothing about policy passes. Instead, he spoke more generally about supply-side shocks and how tariffs could push long-term rates higher. If you're curious, here's the key takeaways of this speech here. Meanwhile, President Trump continues his economic tour in the Middle East, securing a $200 billion investment deal with the UAE and announcing ambitious long-term investment commitments. The kind of headline markets like. But don't forget, US-China tariff negotiations are still ongoing. On the table, steel, aluminium, pharmaceuticals, and tech restrictions. This weekend's meetings could be critical. And with crypto trading 24/7, it will likely be the first market to price in any surprises. Let's check the psychology and structure. The latest sentiment indicators show a surge in fear, especially after May 7th. That's a good thing. Historically, Bitcoin rallies when retail is fearful and hesitant. Accumulation data confirms this. The index has climbed to 1.0, signaling broad-based buying, especially from large players. This mirrors the accumulation zones we saw in late 2020, right before the last breakout. And what about funding rates? They are flat. No signs of overheating. This has been a spot-driven move, not a leverage-fueled bubble. The delta between buy-sell pressure is still net positive over longer timeframes. On shorter intervals like 1H and 4H, some whale profit taking has been spotted between 104k and 105k, but it's small and not trend-breaking. Trend reversal indicators? Out of 10 key metrics, only 2 remain bearish: the Bitcoin Network Activity Index and the IFP. If those flip bullish, we could be entering the steepest part of the curve. Meanwhile, 1.1 billion in USDC flowed into exchanges this week, a massive spike. This stablecoin influx usually precedes fresh buying. So, when might Bitcoin top out short-term? The MVRV ratio for short-term holders is now at 1.09. Historically, we see initial selling pressure at 1.25, which would correspond to a Bitcoin price around 118k. Stronger resistance usually hits at an MVRV of 1.35, and that will be about 128k. Based on the current pace, we could reach that by early to late June. Alright, now that we've covered the macro, the psychology, and the whale accumulation, let's dig into the price action. Let's take a look at the Heatmap. Because what we are seeing right now is a pretty clean bounce of support, with price now coiling just below the next resistance zone. So here's how it played out. Bitcoin started this session around 103k and gradually drifted lower. Then it dipped into the 100.6k to 102.2k range, and that zone held up well. You can see it clearly on the heatmap, thick green bands solid by interest. Price bounced a bit off the level and pushed back up to 102.8k, but hit resistance right away. There's a yellow line at that zone and it acted like a wall. From there, Bitcoin dropped again, back down to 101.6k, but this time the reaction was different. Buyers stepped in strong and price ripped straight up to 104k, clearing short-term resistance on the way up. Right now, we are consolidating between 102.6k and 104k, just chopping, no breakout, no breakdown, and at the time I'm recording this, we are sitting right around 104k. Now, let us look above. The heatmap shows sell walls starting to build between 104.2k and 105.1k. And just above that, we are seeing short liquidation clusters stacking up around 105.7k to 106.2k. So that zone is definitely heating up. No massive yet, but it's growing. If bulls want to break through, they will need real volume behind them. On the downside, support is stacked pretty clearly. We've got strong bids between 102.6k and 102.9k, and if that breaks, there's another layer down, all the way down 99.5k. So here's the setup. Right now, we are stuck inside a liquidity box. Top of the box, 104.2k to 105.1k loaded with sell pressure. Bottom of the box, 102.6k to 102.9k thick bid support. And we are right in the middle. If bulls can break through 105k, we could sweep quickly toward 106k or even 108k. But if we lose that 102k support zone, a flush back to 100k or even 97k is still on the table. This pressure is building. Both sides are loading up. And when this box breaks, it's gonna move fast. Let's stay ready. The breakout hasn't happened yet, but all the ingredients are on the table. Now, let us shift to the whales. The CVD indicator tells us who's driving this move and who might be getting ready to exit. Here, we see the selling wall forming at 105k. Now, if you look at the whale movements, first, look at the brown line. That's the mega whale cohort placing 1 million to 10 million orders. After steadily accumulating through the recent breakout, they have now flattened out. And that means this group, the biggest in the game, is no longer aggressively buying, but they are not selling either. They've hit pause, which usually signals a wait-and-see posture at key resistance. Next, the purple and green lines representing 100k, 1 million, and 10k, 100k traders. They are now pulling back. Some are taking profits, some are scaling out. But overall, buying pressure from these groups is clearly slowing down. And for the red and orange lines, the retail, they are falling down. What does this all mean? The recent rally was driven heavily by larger players. But now, momentum is slowing, especially as price faces resistance near 105k, which we can see on the heatmap above. That big red band is a thick sell wall. Retail is taking profits. Institutions are scaling back. And whales, they are holding, but not pressing. This is what a cooling market structure looks like. Buying isn't over, but it's not aggressive anymore. Everyone is waiting for a new trigger. So, until volume picks up again or we break cleanly above 106k, expect more chop and potentially a retest of support zones. Alright, so here's where we stand. Macro conditions are shifting, inflation is cooling, but recession risk is rising. Tariff talks are still on the table, and global liquidity, it's quietly flowing back into the system. On-chain, we've got stable accumulation, funding rates are flat, and 1.1 billion in USDC just hit exchanges. That's not noise, that's dry powder waiting to deploy. And technically, Bitcoin is coiling, stuck inside a tight liquidity box. Support is holding, resistance is building, and when this thing breaks, boom! So, here's the real question. Do we break 106k and rip toward 110k? Or do we test that 100k support one more time before liftoff? Let me know what you think. Drop your price target in the comments. As I said before, I read everyone and your insights keep this channel sharp. And if this video gave you clarity, smash that like button, subscribe to stay ahead of the next move, and share this with someone who's still wondering if the bull market is real. That was Neil. Stay sharp, stay informed, and I will see you in the next one. Bye bye.